What's up everybody? Welcome to the Stocks channel. My name is Cory and today we did see a powerful rally in the stock market across the board. So the question is, are we going back on the bull from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were up 1.8% and we did get all the way back up to that resistance level at 450. So this shouldn't be a surprise because I did tell you next time we get over that 200 simple moving average, it's going to be a quick trip to test resistance at 450, and you still need to be very cautious from these levels. Without a doubt, this is a very bullish rally off of the lows, and while it does look like we are turning the corner, you need to remember that in all downtrends, there's always going to be powerful counter trend rallies, and yes, sometimes they can be a bull trap. So the one thing that you don't want to do in this market is you don't want to be panic selling every time we see a dip and then buying every time we see a rip. If you do that, you're going to be destined for failure in this market because it's constantly going to be filled with bull traps and bear traps alike. I gave lots of evidence of why it was time to buy the dip down here, and now that we're starting to get a very strong rally, it's time to start locking in some of those profits because we are still in a downtrend until we're not. Remember I told you on SPY the bullish breakouts are not until we can get back over about 457 and then break out back above 461, and we have not yet had confirmation of the bullish breakout. So this high volatile market is going to have huge whipsaws and bull traps and bear traps alike, and you need to be very disciplined and make sure you're sticking to a plan. If you're selling every time the stock market goes down and buying every time it goes up, that is a recipe for getting whipsawed and you're going to be losing money in both directions, and that's highly suggested that you don't do that. Buy at strong support levels and then take your profits at resistance until we can get a bull trend back in this market. Or if you're playing to the downside, you should only be shorting at strong resistance and then covering your short positions at strong support. So right now you have to remember we're at strong resistance on SPY at 450 and the bears are going to try to attack from here. So if we see the price action blasting through 450, that will lead to a short squeeze, which should be just enough energy to send us up to the 50 EMA, which is right around 457. Back above 457 and then breaking out above 461 is your bullish confirmation, and then we could start to buy the dip in this market and get a lot more aggressive to the bull side. But right now this is still a downtrend, so you need to respect the fact that the trend is your friend and you should be selling into resistance and being cautious because more downside could be coming. Now let's talk about the downside scenarios because there is the possibility this is a bullish impulse and the downside scenario is a buying opportunity. The levels I want you to pay attention to in that scenario will be the 200 simple moving average at 442 and this support trend line right around 440. If we break down, we still do have support at 436 and 428, but below 428, you're looking for that next leg lower, and that is more than likely going to send the stock market into a bear market. So SPY below 428 means we're retesting the low at 420, and below 420 we're going for that next leg lower to 411, and below 411 we're more than likely going to 400. So there is a lot of support levels for the bulls to play off of, but there's also a lot of resistance levels for the bears to short at, so you're still going to see a volatile market. This is not going to be a smooth ride up or a smooth ride down, so you need to make sure that you have a very strict plan and you're playing off of only strong levels only. So watch those critical resistance levels and those critical support levels, and everything in between 450 and right around 439 is going to be a trading range, and it's going to be very tricky. So what I would suggest for you to do is wait for a decisive breakout above 450 or a decisive breakdown below 439. Also, we did close the trading month and you could see there was clearly a lot of buyers of the dip, and even though we did have a very volatile and very bloody month of January, you can see it's really not that bad on the monthly chart, closing just below the 5 EMA. So that's still something to heed caution about, but in the grand scheme of a very strong macro level bull market, we did get a lot of those losses back and we did close just below the 5 EMA. So this is still a very strong macro level bull market that you don't want to become overly bearish in. Jumping over to the NASDAQ 100 triple Qs, you can see that we were up 3.2% today and we had a very bullish impulse off of the lows. Just like I said on SPY, these are great levels down here to set your risk at, and if you did take that long trade, you should have handsome profits at this time. But don't get too greedy because we're coming into strong resistance, which is going to be the 200 simple moving average at 365.9 and the resistance trendline breakout level right around 367 to 368. The triple Qs will be looking very bullish back above 369, and then we could be saying we're going back into another bull cycle once we do get that confirmation of the breakout. However, we don't know that we're back into a bull market on the daily chart until we can get back above about 389, but the first bullish breakout will be back above 369, so watch that level closely. Now, if we get rejected at this resistance level, you can clearly see this is still a downtrend with lower lows and lower highs. So if we do get rejected at the 200 simple moving average, or right around 367 to 368, you will be looking down here for support levels to try to hold up. Those support levels will be 360, 352, and then if we break below 352, we're coming all the way back down to 340 and then 334. Below 334, we are going into a bear market, so that will be your confirmation that the bull market is dying off and we're getting ready to roll over and go much lower. So watch those critical support levels or look for the bullish breakout. And remember, anything in between about 352 to about 367 is going to be a very volatile whipsaw. On the Dow Jones, we were up 1.14% today, and we did close back above the 200 simple moving average. Now, the Dow Jones is one of those key indicators that I was telling you not to ignore, because the Dow Jones has two gaps to fill to the upside at 356 and 360. It's very hard to believe that we're going into a bull market and the Dow Jones is not going to close those gaps first. Remember, there's no guarantee that those gaps have to get filled now, but we do know that those gaps will get filled, and it's not a matter of if, it's just a matter of when, so use that to your advantage. The Dow Jones is going to have strong resistance around 354 to 356, but on a breakout back above 356, that will be confirmation we're going back on the bull, and we should have a quick trip to close the gap at 360. Back above 360, we should redevelop a bull trend, and we could try to break out to a new all-time high this year. To the downside, look for support at 350, 347 in the support trend line at 344, and if at any point we start breaking down below 340 to 338, we are more than likely going to see a bear market, and we're going to go down to retest that low at 331.5. In the Russell 2000, we were up over 3% today, and you can see that support level at 191 is holding up for the time being. Price action is back over the 5 EMA, and the bullish breakout will be back above about 205 and then back above 212. Above 212, the next bullish breakout will be 219, and then we could go up there to close that gap above 228. To the downside, there's only one critical level to pay attention to, and that's a close below 191, because that will confirm that we're going down to about 170 with support on the way there at 183. So look for support to the downside around 196 to 191, and remember, this is still in a bear market and there's still a lot of downward momentum, so don't get overly bullish on something that's in a strong downtrend. On the Arkk ETF, we were up 9.46% today, and as I continue to tell you, there's evidence that Arkk is reaching a bottom in the very near future, and we might be seeing it right now. We're starting to see high volume buying, and we are bouncing off of that support level right around 65, and we did get an early warning sign that we could be getting a bullish breakout on a close back above 75. The next bullish close will be back above 85, and then confirmation we could be going back into a bull market will be back above 91 and 99. So you can start taking long trades, setting your risk at 65 or 60, but remember, we are still in a bear market and we still have a very strong downtrend, so you do need to understand that you are going against the trend, so you need to have very strong risk management. If we break down below 60, this is going to get out of control to the downside, because that is a very strong support level, and that's why I continue to tell you it's possible we are reaching the bottom in the very near future. So look for support on the downside right around 73 to 65, and below 65, you're looking for a test of that level at 60. On the VIX, we were down over 10% today, and we see the VIX is coming back down to that support level breakout right around 24. If the VIX closes below 24, that will be a very bullish development, and the confirmation we're going back into a bull market will be when the VIX closes below 20. However, if the VIX bounces off of 24, you're going to see more volatility and more downside, so watch that level closely, and remember, we're not out of the woods just yet. On Bitcoin, we're currently up 1.96%, and Bitcoin is trading back above 38,000, and the bullish breakout level is going to be right around this $40,000 resistance breakout. Back above 41,000, we're getting a lot more bullish, and if we can get a confirmation breakout back above 46,000, we could see Bitcoin starting another bull rally. To the downside, if we break back down below 38,000, you're looking for possible support around 35,000 and then 31,700. And if we break below that, we could be going all the way back down to 20,000 if we do start closing below 30,000. On NVDA stock, we were up 7.21% today, and we did close back above 236. So it does look like NVIDIA is trying to go back up and retest that resistance level at 253. We opened a gap below that won't close until we get back down to about 228, and we still do have that support level at the 200 simple moving average right around 222. If we start closing below 222, we could see NVIDIA going into a bear market, but more than likely we should see NVIDIA bottoming out around 196 to 192, so that should be a great buying opportunity going into earnings. Your bullish breakout levels are back above 253 and then back above 271. And if we can get back over 271 and break out above about 279, we could go back into another bull cycle, which means we could see NVIDIA running up into earnings. Don't forget about that gap below though, because we do know that gaps do get filled and it's just a matter of when. So that could be the next best buying opportunity. On Tesla, we were up 10.68% today, and we see Tesla closing right at that resistance level right around 940, and we did open a small gap below right around 859. So it is possible we go down there and close that gap, but you do want to get a lot more bullish if we start closing back above 959 and then back above 1000. Tesla above 1000 should trigger another bull cycle, and we know earnings is in the rear view mirror, so we don't have to worry about volatility from earnings. As long as Tesla is above about 815, you want to stay bullish, but if Tesla does close below 815, we could be seeing Tesla going into a deeper bear market. On Apple stock, we were up 2.61% today, and Apple continues to give us signs that we could be going right back into a bull market because Apple is one of the biggest stocks in all of the indices, and it's definitely a market mover. We see Apple back above all the moving averages for the second day in a row, and we clearly see a lot of bullish momentum building up. So remember, I told you that Apple was most likely in a correction that was going to end right around 157 to 153, and we're starting to get a very impulsive bull rally off of that level at 157, and it does look like we're going right back on the bull, and we're getting very close to new all-time highs. So with Apple going back into a bull market, it's going to be very difficult for the bear scenario to play out because Apple is looking very strong, and it's definitely starting to look very bullish. So look for downside support levels at 172 and 168, and as long as Apple is trading above 166, you will want to stay bullish, and it's still possible we're trying to get up there to that price target right around 188. You have resistance at 176 and 180 in the previous all-time high at 182. On the financial sector, we were up 0.88% today, and we see the financials still bouncing off the 200 simple moving average, and we still have a gap to fill up there at $41. The industrials were up 1.04% today, back over the 5 EMA and starting to trend back towards the 200 simple moving average, and there's still a gap to fill above at 106. The healthcare sector was up 0.57% today, back over the 200 simple moving average for the second day in a row, and there's still a gap to fill up there right around 141. The energy sector was up 0.44% today, and we still have bullish price action and a bullish trend, but we're definitely coming into resistance right around 66.5, and we do have gaps to fill to the downside. So jumping back over the S&P 500, this is definitely going to be a very critical time in the market. So remember what I told you about the Dow Jones and Apple stock because they are favoring the bull scenario. I would not ignore an indication as strong as Apple stock because as goes Apple, usually goes the market. So don't ignore what I continue to tell you on Apple stock because that would be a very big mistake coming off of a very strong rally like we're currently seeing. So remember, there's still plenty of volatility out there and there's no reason to chase something that you missed. So don't think just because you missed this rally that you have to start chasing it now. There's always going to be a buying opportunity right around the corner. Also, don't forget that I have bank trade alerts, which sends you all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. Bank Trade Alerts has never had a negative year and makes money whether it's a bull market or a bear market. So even if we go into a bear market from here, just like 2008 when everybody was losing money, Bank Trade Alerts beat the market and made over 90% that year. If you're interested in learning more information or how to subscribe to Bank Trade Alerts, you can click on the link in the description of the video. I also have the Stocks channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks channel trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.